Hello everyone. In last session, we discussed with regard to industry analysis. Today we are going to discuss company analysis. As I said, in fundamental analysis, there are three. One is economic analysis, second one industry analysis, and third one company analysis. Okay, this is the last topic of fundamental analysis, that is company analysis. Now, what is company analysis? Company analysis, as the name suggests, deals with analysis of the company. See, what is company analysis? Company analysis, as the name suggests, deals with the analysis of a company. The aim of company analysis is to find out which is the most attractive company to invest in within an attractive industry. Now, what is industry? Industry is nothing but group of companies, right? In that, which company is better, that you have to identify. That is nothing but company analysis. That is the objective or the purpose of the company analysis. Is it clear? Company analysis is nothing but analysis of the company. Now, in other words, and company analysis is nothing but the analysis of the financial statements of the company, right? Like profit and loss account, balance sheet, right? Cash flow statements, right? These analysis is nothing but company analysis. Hope you're clear, right? The aim of company analysis is to find out which is the most attractive company to invest in with an attractive industry. Selection of best company in a attractive industry. Clear? For this, investors collect and study lot of data about the company. Then, but an investor should always keep in his mind the reason that data are always more reliable than a long-term before past data to be studied. See, what is most important thing is you need to study the reliable data as well as recent data. Is it clear? Investor should always keep in its mind that recent data are always more reliable than a long-term before past data to be studied. So two things you need to remember. The main thing, that is you need to study about recent data. Okay, that along with that, see most reliable sources. From most reliable sources, you have to collect the data. That is also important. Is it clear? Then, as I said, what is company analysis? Company analysis is nothing but analysis of the statements, that is financial statements. What are the financial statements? It includes profit and loss account, balance sheet, cash flow statement, notes to accounts, etc. These analysis is nothing but company analysis. Now, what is financial statement? Financial statement analysis, it is an important step in company analysis. It is used to estimate the financial performance of the company. Many investors go for ratio analysis to know the potentiality actually and limitations of the companies. Different ratios measure different aspects of a company. Even we use the word potency as well. Okay. Many investors go for ratio analysis to know the potency and limitation of the companies. Different ratios measures the different aspects of a company. As you already studied these ratio analysis, right, in accounts. Clear? Now, what are the ratios that you are going to study? See, what is ratio analysis? Ratio analysis is the process of forming and understanding the numerical relationship based on financial statements. What are the numerical quantitative relationship, we can say, right? Understanding the numerical relationship based on the financial statement, that is called ratio analysis. Then, say, what are the ratios? What are the different ratios? One is liquidity ratio, another one is turnover ratio, solvency ratio, and profitability ratio, right? What are the different ratios? One is liquidity ratio, turnover ratio, solvency ratio, profitability ratio. Now, how do you calculate that liquidity ratio? See, what is liquidity ratio? See, liquidity ratio is used to extend the liquidity position of a firm. Remember, liquidity ratio is used to extend the liquidity position of a firm. There are two kinds of liquidity ratio. One is current ratio, and another one is acid test ratio. See, what is liquidity ratio? Liquidity ratio is used to extend the liquidity position of a firm. There are two under liquidity ratio. One is current ratio, another one is acid test ratio. Now, how do you calculate liquidity ratio? Liquid assets divided by short-term liabilities, right? Then, what about current ratio? It is computed by dividing current assets by current liability. Clear? As I told, under liquidity ratio, there are two. One is current ratio, another one acid test ratio. What is current ratio? How do you calculate? Current assets divided by current liability. What about acid test ratio? It is also termed as quick ratio. It is resolved by dividing quick assets, that is cash, marketable investments, sundry debtors, and by current divided by current liabilities. Cash, marketable investments, sundry debtors divided by current liabilities. That is acid test ratio. Is it clear? What about current ratio? Current assets divided by current liability. So these two comes under liquidity ratio. Then second one, that is turnover ratio. What is this turnover ratio? These are also called efficiency ratios. They indicate how efficiently assets are being managed. See why turnover ratio is used? How efficiently assets are being managed. Is it clear? Turnover ratio is used. It is the indicate. It indicates how efficiently assets are being managed. Clear? That is what turnover ratio. How do you calculate turnover ratio? That is formula is net receivable sales divided by average net receivables. So remember the formula, net receivable sales divided by average net receivables. You don't get practical, don't worry, only theory part. Okay, just remember this formula. Even if you don't write formula in exam, it's not a mandatory. Okay, you just, even you can write the meaning as well. Okay, now what is the formula for turnover ratio? That is net receivable sales divided by average net receivables. Then third one, there is solvency ratio. See, these ratios are calculated to know whether a firm will be able to pay its debts in long term or not. Why solvency ratios are identified? Solvency ratios are calculated or identified to know whether a firm will be able to pay its debts in long term or not. Clear? Whether the company pay the long term debt or not. To identify or to calculate that, solvency ratios are calculated. Okay. So formula is net assets divided by net premium return. So what is the formula? Net assets divided by net premium return. Clear? That is regarding solvency ratio. Then last one, that is profitability ratios. Last one, that is profitability ratio. See, what is profitability ratio? Profitability ratio measures the effectiveness of management in the employment of business resources to earn profits. Profitability ratio measure the effectiveness of management in the employment of business resources to earn profits. These ratios indicate the achievement of a business enterprise for a specific period of time. See, the profitability ratios indicates the achievement of a business enterprise for a specific period of time. Clear? Profitability ratio measures the effectiveness of management in the employment of business resources to earn profit. These ratios indicate the achievement of a business enterprise for a specific period of time. That is regarding profitability ratio. Is it clear? Some other ratios are there, that is earning to price ratio, that I didn't include here. Okay, earning to price ratio. What do you mean by that? Earning to price ratio, this is calculated by allocating the EPS, earning per share is there, right? EPS, earning per share divided by market price. Earning per share divided by market price, that is earning to price. Earning to price ratio, how do you calculate? EPS divided by market price of a share. That is another one. Then one more, that is dividend yield ratios. See, main four, some other ratios are there, that is earning to price ratio, that is EPS divided by market price per share. Another one, dividend yield ratio, that is dividend per share divided by market price per share. See, dividend yield ratio, you just note down, one is earning to price ratio, another one dividend yield ratio, that is dividend per share divided by market price share. Then third one, that is payout ratio. It is used to measure the portion of EPS given as dividend. It is calculated by dividing the DPS by EPS, dividend per share divided by earning per share. Payout ratio formula is dividend per share divided by earning per share. Earning to price ratio, EPS divided by market price per share. Dividend yield ratio, dividend per share divided by market price per share. Payout ratio, that is earning per share, sorry, dividend per share divided by earning per share. Is it clear? These are the some other ratios. Is it clear? One is financial statements, another one, that is annual reports. Remember, another thing you need to study, that is annual reports, which comes under company analysis. Okay, annual reports. See, annual reports give an idea about what company's management is thinking and how firm will be taken further. See, investors also study, analyze annual reports of a company. They are very interested to know what is communicated by board of directors. Nowadays, investors are also becoming interested in corporate social responsibility, disclosures, and reporting by company. See, annual reports give an idea about company's management is thinking how firm will be taken further. See, what is the main purpose of studying annual reports is nothing but what company is going to think, right? And how firm will go further. Clear? So for that, annual reports are going to study. Is it clear? So I just summarize the things of company analysis once. Company analysis is the final analysis in the under which comes under fundamental analysis. Okay. Many researchers and analysts studies the variety of information about the company. It is assumed that a person doing company analysis has already done economic analysis and industry analysis. Company analysis can be done by studying financial statements. Is it clear? This is about company analysis. Hope you are clear. Fundamental analysis, under that economic analysis, then industry analysis, and another one, third one, that is company analysis. Is it clear? Company analysis is nothing but analyzing the financial statements of a company. It like trading profit and loss account, balance sheet, cash flow statements, right? All these study is nothing but company analysis before investment. All these analysis is done before investment. After analyzing all these factors, economic factors, industrial factors, and company factors, all these studies, by considering all the factors, then you are going to invest in any source or any instrument. Hope you are clear. In case any doubts, you can contact me. Thank you.